All right. Mindspace Business Parks REIT posted strong earnings for Q3 FY2026, delivering strong net operating income, growing around 29% year-on-year. The growth was driven by robust leasing, portfolio expansion, and rental momentum in key markets, and the company remains focused on pursuing accretive acquisition opportunities. Ramesh Nair is the CEO and Managing Director of Mindspace Business Parks REIT. Thanks so much for joining us, Ramesh. I really do appreciate that. I just want to understand this from your perspective. I know this question has potentially been asked a couple of times in the earnings call, but for this moment that we're in, given everything that's happening globally, your properties are making nearly 30% more money than they did last year, and investor payouts also are rising. Can you tell us that this momentum will continue with surety?
Well, great question, Amitoj. What we've been seeing is a very strong and stable performance over the last 2 to 3 years. We are definitely benefiting from demand tailwinds. Ours is a high-quality portfolio. The growth is happening not just in the portfolio size, but we're also seeing visible pipeline growing. Obviously, you need to have a disciplined capital allocation when you're managing a REIT, which is nearly 44,000 crores in GAV. 2, 3 other big trends which we are seeing is cap rates are also compressing, Amitoj, and this is definitely going to lead to a NAV tailwind. Rental growth also is going up, and that's leading to increased NAV valuations. So together with that and cap rate compression will create a definite double leverage for us. We've always seen that NAV valuations typically lag rental growth, which will help us in future repricing. And also interest rates. Last year, March, our interest rates, total cost of funds used to be 8.15. 3 months back, it was 7.52, and that's dropped to 7.39. So all these things working in our favor.
Fascinating. Now, India has its all-time high demand for commercial spaces, and I just want to understand where you're allocating in that context, whether that demand will continue. What are you thinking about, putting your money? Is it data centers? Is it office spaces? Is it retail spaces? Just give us a sense of that.
It's a combination, Amitoj. So absorption numbers have been phenomenal. New records being broken every quarter despite all the global uncertainties. The final numbers for calendar year last year just came up, and that's the demand has gone up 14% to 57 million square feet, and this is an all-time high. And Q4 also, just Q4 saw a demand of close to 17 million square feet. We are very focused on 2 asset classes, grow our office pie. We already have 5 data centers. We want to increase that too. So offices, data centers. We also have hotels in our portfolio. We want to look at how we could grow that, and a lot of F&Bs to complement these asset classes. So that's the focus going forward.
Okay, that's fascinating. I just want to understand the sectors where the demand is coming from, because that gives us a picture of the Indian economy. How are, for example, hybrid work and these flexible space models impacting your leasing strategy, and at the same time these long-term rental yields that investors look forward to?
So 2 of our biggest markets are Hyderabad and Navi Mumbai. Hyderabad has clearly emerged as the most sought-after GCC hub in India. Out of all the GCCs who entered India last year, 46% of them went to Hyderabad. We also have a significant presence in Mumbai and Navi Mumbai, which people prefer because of the infrastructure, the BFSI talent, safety, traffic, AQI, quality of living, all those aspects. So these are the 2 cities where the focus is, and we are investing more. The other 2 cities, which is Pune and Chennai, we are growing in those 2 cities also.
Okay, I was just going to ask you which cities you're focusing on. Where does Mindspace stand in the GCC conversation with its 3 biggest competitors?
So, Amitoj, 54% of our portfolio today is GCCs. And if you look at the last 2 days announcement with the EU trade deal. Today, close to 12% of space take-up in India is from companies from Europe. 37% is American companies. So structurally, it's definitely positive for the office services sector. There were talks about services liberalization in the plan which came out, and there's a lot of EU-linked GCCs who we believe will expand more in India, especially after this deal.
Okay, we got to talk about the budget because it's around the corner, a couple of days. What incentives are you expecting for the REIT sector? And I think this is perhaps more important. What can the government do to help retail investors, invest more in this sector? What will they be able to do that will make this sector more attractive to those traders, those retail investors?
So, Amitabh, this government has done an exceptional job with regards to the REIT, whether it was the recent reclassification of REITs as an equity instrument. This government also did the SEZ demarcation laws and multiple other things, whether it's on LTCG for REITs and other benefits. What we would want the government a little more to do is, obviously, if the government can increase the investment limits and increase, especially for the insurance, pension, and provident fund sectors. If REITs are allowed to borrow directly from banks, also input tax credit, which is today available for residential and commercial sale, but not available for commercial leasing. If some smoothing on that can be done, that will also help us. So this would be the demands from the budget from the REIT sector.
Okay, but do you see it happening very quickly on a percentage scale?
Let's hope it happens. But this government has been super supportive. Every time you've taken a proposal as an industry body, we have the India REITs Association, IRA. Every time we've taken any proposal to them, they've always kind of looked at it.
Okay, really appreciate that. Ramesh Nair from Mindspace Business Parks REIT. Thanks so much for that on the occasion of your Q3 earnings, and congratulations on that. We're going to come back to you as and when there are more developments, particularly after the budget, hopefully. Now wrapping up our coverage right